Hey, welcome to Market Monday, where we're going to give you a quick update on what's going on with interest rates. Let's get right to it. Can't believe that it is the end of October, Halloween coming, Thanksgiving, right around the corner of the holidays, but here we are. We have a lot going on this week. Number one, we have the Fed meeting, which is Wednesday, November 1st, 2 o'clock p.m. Eastern time will be the Fed policy statement, followed by the press conference at 2:30, and this typically does move the markets. And we're pretty sure the Fed's not going to raise rates this time, but it's the language and what they say that's most important. So we're going to keep an eye on that. I'll break that down for you next week. Friday, first Friday of every month, is the BLS jobs report. Jobs report's typically a big market mover, so we're curious to see what the job creation has been as well as the unemployment rate. Again, we're going to get that Friday, and next week I'll break that down for you. Let me show you quickly what's been going on. So as I've shown you in the past, what you're looking at now is a chart of mortgage-backed securities. And basically, mortgage-backed securities are bonds, a mortgage bond that trades in the bond market live. And the movement of these bonds is where mortgage rates come from. It's that simple. And a red day is a bad day, and a green day is a good day. And as bond prices go up, rate comes down. So if you look at last week, you can see we have a lot of green candles. Earlier on the week, we had a good recovery. Rates started to come down a bit. Had a bad day on the 25th where we lost it. That carried over into the 26th, but you'll notice that we ended up gaining it all back and finishing right here. And then on Friday, we actually got a little bit better in the bond market, so rates came down. Starting the week off to the downside again. And again, this might be a pattern of what we've been really seeing for the last year and a half, where we get an increase in mortgage rates because bonds decrease. We get a little bit of a recovery. It hangs for a little bit, and then we start going to the downside, and rates come up even further. And that's been the pattern definitely all of 2023. So what we do as mortgage professionals in that situation is we're watching this, and we try and lock in our clients at these little peaks here where we can start to see the pattern changing. This would be a good time to lock because we could lose it all and see rates go even higher. Then maybe we'll see a little bit of a recovery, and we'll try and lock in again. And you can see that clearly. We've had that happen. We've had it happen here. 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 Every time you've seen a downfall in the bond market and prices getting higher. Downfall in the market, kind of a tie here. Downfall in the market, prices getting higher, right? A little bit of a recovery. Downfall, rates getting higher. Recovery, rates getting higher. Recovery into last week. Let's see what happens, but it looks like the pattern is for rates to come down and get higher again. So we want to watch out for that because these charts don't lie. This is exactly where rates come from for all banks, lenders, brokers. For the most part, every loan that's sold, conventional, FHA, VA, USDA, rates are coming from the bond market. So I wanted to keep you up to date on that. The outlook for this week is we're in a locking mode because, again, we feel that we might have peaked out here. And we're going to have to keep a close eye on this. Now, things we're looking at in the background are the wars that are going on, Russia, Ukraine, and of course, Israel and Gaza. We really want to see how that plays out because typically the more involved the U.S. gets, war is a bad thing. And that actually kind of helps the bond market. So sometimes we get an influx of money coming out of stocks and into the safety of the bonds. And when that happens, it actually can drive rates lower. So we need to keep an eye on that as well. We got a lot going on. I hope this helps give you an idea. And I'll bring you the updates next week.